So my next guest is one of the foremost experts on the AI economy in the entire world, and really his key with him and his firm is positioning investors to be ahead of the next hot narrative or the next opportunity. So let's bring in now Futurum Group, their CEO, Daniel Newman. And Daniel, I like this quote here. The AI economy will ultimately be defined by a few broad themes: who controls the compute, who controls data, who controls deployment, and who governs security and policy at scale. Who is it?
Well, I mean, good to be with you, Charles.
You
I mean,
too,
up and down the stack. I mean, the one thing that is consistent is this innovation is happening at an absolutely breathtaking pace. You leave for a weekend and then you get Moltbot, and then you come back another weekend and you get Claude Work. And I think all the people, Charles, over the last year that have been saying, oh, it's a bubble and AI has no utility. I mean, I think it's a wake up as we're seeing sector sell off, financial services, data companies, legal companies, the entire SaaS trade. We are seeing AI disrupted at an incredible pace. And it's really going to be determined by the companies that are positioned well.
Right, and the thing is, you guys that you created the Futurum 15, the idea was to go beyond the Mag 7, right? Because that's when we say who answers these questions, it's probably beyond the Mag 7, which unfortunately, those are the only names that many people use or equate with AI.
Yeah, I think it's got to be both. You know, what's happened, I think you just talked in a segment about the broadening out of the market, and I think the broadening out has actually brought some of those Mag 7 names back. Right. You know, names like NVIDIA that are trading at just over 20 times forward, while Jensen's talking about a $500 billion order book, and he still controls 90% of what's going on in the infrastructure space. But then there's other companies like ARM that is attached to every single NVIDIA deal. The CPU, so important. There's names like Snowflake, Charles. That are basically the data that companies are going to be able to use, the rules and the rails.
But you say CapEx is king. Everyone else is saying last week they're spending too much money. They've gone too far. There was a time when they would announce CapEx increases and the stocks would go up. Now they say we're going to spend X amount of money and the stocks go down. What is it that the street might be getting wrong about this? I mean, I think it's a great story. These aren't dumb companies. These are trillion-dollar companies. They know what they're doing. They want to stay prominent, and for years and decades to come, I think this is brilliant planning. But Wall Street sees it differently right now.
Well, I mean, first of all, I love that slide. But the TLDR here is that these companies know they have a multi-decade fight to protect their moat. If they don't make these investments now, you're trading off short-term cash flow. And that's what everybody's discounting. Oh, they're going to make less cash in the future years. But I love the companies like Google and Meta that have these cash machines in their search business, or in Meta that has it in their ads business, that they can afford to build out the future to protect those margins, to protect that business, and make sure that in 5 years, they're still part of the Mag 7.
Right. Let's talk about making money, because all of a sudden, these bottleneck themes have popped up. All right, it was energy, and then we saw all kinds of things associated with energy go through the roof. Memory and storage, SanDisk, and of course, the Korean companies through the roof. Now I'm hearing packaging as an issue, and scalability, scalable inference. Where are you positioned? Because I know in the Futurum 15, all of these areas are covered.
Yeah, I mean, personally, I still really do love the AI GPU REIT plays. On energy side, Cypher is one that I really, really like. I've positioned and gotten longer on some of these crazy dips. Over the last few months, you have these sell-offs.
What about Iron? Are you following that?
Yeah, I absolutely am. And let me tell you where I sit. I have had some positions in Iron. What I like about Cypher is they've stayed pure in their utility play. They're focused on the energy side. I still think Iron's a very interesting company, but they've tried to kind of go into the CoreWeave space and the Nebius space.
Okay.
It's a harder place to enter, also standing up and managing all of the infrastructure. Now, if they do that well, though, their upside is substantial.
Packaging, this is all of a sudden a new bottleneck, right? I think you have Amcor, right, in your Futurum 15.
Absolutely. I mean, look, connectivity, packaging. We know that with TSMC, there's so much focus on CoWoS and the ability to basically get enough access to enough chips to be able to build out these systems. These next generation, these Vera Rubins, these Helio systems, very complicated. Having enough access to packaging. By the way, Intel becomes a really interesting play, because some of the next generation of packaging from some of these big chip providers, Charles, are going to be done at Intel.
And scalable inference.
Well, I mean, I think inference scaling across the business, I think a lot of it is going to be in the application layer.
Okay.
It's where do you get what tool? So you've talked a lot about software as a service going away. I think the best software as a service companies, I love ServiceNow, I like Snowflake, I like the companies that have a long moat over the long term that can't be AI'd out.
ServiceNow has gotten hammered. I'm in it, I'm getting hammered. When relief? When do we get some relief on this thing?
Well, I think the relief is two-sided. I think one is the market first has to understand the disruption is not permanent. AI will not destroy. What's going to happen is AI will collaborate with these technologies. The challenge is, and I think your earlier guest said this, she said it very wisely, is that the re-rating is real. They've enjoyed multiples in the 50s and 60s. I see these multiples coming down and looking more like multiples of hyperscale cloud companies and large innovators like NVIDIA in the mid-20s and 30s. So people have to understand when it hits that lower multiple, these start to get really attractive because ServiceNow is a rule of 55 company. I mean, you may hear AI is eating software, but in most of the earnings, in Adobe's earnings, in Salesforce's earnings, in Now's earnings, I haven't seen any erosion of earnings so far. So it hasn't hit their bottom lines just yet.
And Meta's your favorite play right now, your best idea right now.
Look, last year they spent a fortune hiring people, and then all of a sudden really didn't put anything out into the market. They went quiet. But this is a company that I think is going to deliver something like $30 a share of earnings next year. If you look at the multiples on those earnings that the Mag 7 companies enjoy, it's underpriced right now. It underperformed the market in a big way. But I love the fact that they have the eyeballs of 3.5 billion people every day, and they have a real AI use case. Like they are literally attracting and keeping attention, serving up ads, and have the world's audience looking at what they're doing every single day.
Yeah, no, I think the street gets upset with Zuckerberg from time to time for maybe quote unquote overspending on things like Reality Labs, but he's come back and like I think that you're talking about the money. I think they paid one kid like $1 billion for 4 years, some crazy numbers. Anyway, yeah, I'm in the stock too, and I have extreme confidence it's going to do well. So I only got 30 seconds, so we can't necessarily go over Oklo and all of these, but you mentioned ARM already.
Yep.
Mongo's a name. It's up big today. It's one of these names that periodically earnings come out and the stock goes through the roof, and then it feels like maybe another quarter later it goes down. Is there some inconsistency there?
The rules and rails of running applications in the AI era is still going to require software like MongoDB and Snowflake. Okay. People think that you're just going to stand up your own database and edit and manage your own software every single day. They're going to partner with tools like MongoDB. This one's here to stay, but it can be a little volatile, so you do have to deal with that. But I still like it. We still really like it as part of our AI 15.